my jam, I feel good.
There's nobody that likes candy more than Howie.
You do like the candy.
Howie, if in Howietown, there's a candy store right when you get into town.
In Coronado.
Yeah, and Howie.
Great store.
In the future Howietown, which Coronado might be called if Robinhood goes public and eToro goes public, and I buy up a little section of town for people like you, Wolfman Jack, JC Parets. You look like the Wolfman.
The markets continue to evolve. New asset classes, new vehicles to invest, and give people the power to pick individual stocks, not be a slave to the index ETFs, right? Is that what's happening here?
Yeah, I wrote about I joke about it, but I only joke about it because I'm learning and having a blast. It's been said that I've not had more fun. Obviously, the pandemic aside, of course, so it could change daily, but I have not had more fun watching the markets in the history. And I've been doing this a long time. Every fucking day, I'm like, I wake up, there's new tickers, there's like new management, there's new stories to tell. It's like everybody's a tech company, but nobody's a tech company, as we talked about last week, but everybody's saying they're a tech company. Industrials want to be tech want to be industrials, metals want to be digital.
Solar are the best energy stocks, right? The tech of energy.
The tech of energy. And if you look at First Solar, which is just whipsawed me because it was the weak one. Now it's just literally going through the moon.
Yep.
And we're talking about strong monthly, which I like to use as you like to do. If I'm going to be technical at all, I need monthlies to just keep my head focused. I need the big thick bars, red and green.
Agreed. Those are called candlesticks, for the record. Howard doesn't have bars.
Oh. I call them nougats.
Little nougats.
They're monthly nougats of red and green, the nougat. And there's just something about looking at a monthly chart that, as I get older, because I don't want to trade.
Hello, Mana.
Toyota
monthly chart looks good. Talk to me about the evolution of markets.
Well, I ran a hedge fund in 1998 to 2006 when I started Wall Strip. I still kept it going, but I had to tell my LPs that I was busy. I was giving shares of my new companies to the fund for my time spent, but it was closely held, like you when you were starting the fund. It was friends. And in about 2004, 2005, I was pulling my hair out. And it wasn't just falling out in clumps. And I was forcefully removing my hair, trying to beat the market. There was so much anxiety about it. How do you beat? Everything was the S&P. The S&P was coming into its own. It was like, you got to be indexing. And you had BlackRock and Vanguard. You had target dates being jammed into people's 401. Everybody started owning the same thing, and it was self-fulfilling at many levels. We didn't know that at the time. Buffett's making bets against hedge funds about what the next 10 years are going to be. And kudos to the people that got indexing right. That's been a hell of a fucking run from 2005 to this week or this year till March. I would say until March's volatility spawned maybe a directional change. Maybe this is just a brief interlude of joy for me on the way back to index.
Well, just think about the alpha that was generated by being in the right names versus the index. Like if you were in the index and you only had a small little piece of these monster 4, 5, 10, 20 baggers, monster runs.
And so I'm thinking indexes now was getting overplayed, just like financial leverage was like, oh, you got to have leverage. I think indexing has its place in every portfolio. But what happened to individuality? And then the millennials, God bless their sweet Toyotas, the millennials and their Toyota, woke up one day in their chat rooms and they were like YOLOing a couple of stocks in March because their parents were freaking out or because
did Bitcoin trigger that? Did Bitcoin sort of tease that a few years ago? And now that they're all stuck at home, now they're like, hey, now I got the time or something?
Bitcoin was a first false move, mostly men, mostly bros. No, seriously, like.
What is a bro?
Like,
How would you define bro?
'07 was 99 for a next generation. It was all these young boys.
2017, you mean?
2017. My nephews texting me, they were making 400%. Like that is not happening now. Now I'm golfing in my caddy. Not that I take a caddy a lot, but we'll share a caddy for
You're a little bougie.
Super bougie. That's why I dropped it, but not. But he's not like carrying our bags. He's on the cart. He's doing shots with us. He's just reading the greens. Anyways, he's got like 9 financial apps, my caddy, last week. And none of his questions were dumb. Whereas in 2017, there was no real company. There was just digital air. And people were YOLOing 50K moves into 500K. So that was a taste. And that got shut. That door got shut because there was no real companies. It was just like pink sheets globalized, right? Then Robinhood takes off in 2000, maybe 19. And then this year, March just created this what do you call it? This when you had all these moves, I forget the term. God,
perfect storm.
It's like a perfect storm, but you created all these mispricings, right? Dislocation. Thank you, buddy. Thanks, Teen Wolf. So you created these dislocations, and I mean, March 23rd, dude, the S&P moved 28%. I mean, that didn't happen ever, like from low to high or whatever during that one fucking day. And the market had already probably bottomed 6-7 days before that. And so if you look at that candle, I don't know, the hourly candle or the daily candle, that blew people's minds. And so now you've got a year where people who were like net neutral, like hedge funds that I know up 60%, right? And in a year like that, the cat's out of the bag because we're not talking about digital assets. We're talking about Starbucks, McDonald's, Lulu, Peloton, like brands that people have in their living room. You know, Peloton's in a lot of living rooms. And then the other thing that some of these founders are doing, like the Peloton guy, that fucking guy's using his stock. And I've talked about this before on your show, like with Crocs. When Crocs had their run, they just sat there. They let their stock go up and they didn't do anything creative with their stock price, right? And guess what happens when you don't do that? Eventually the valuations matter or, you know, something else comes along. And Crocs went from like 90 to 2. What does Peloton do? Fucking gangster just bought Precor last night. Just jammed the shorts again because the shorts thesis is, oh, China's going to wreck their quarter. Well, now they just took China out of the equation or part of China. So I'm saying these guys are like creatively thinking outside the bank. So it used to be a bank had to bring you a deal. Now you're on Twitter talking to other CEOs and you're just solving these problems in real time, not even inside information. Anyways, cat's out of the bag. CEOs are on StockTwits, Twitter, Reddit. These are public company CEOs. They're you know, it's not even illegal. They're just listening and they're leveraging their networks and they're going faster than ever. And in that world, when a kid has a Robinhood account and all these smart people in their groups, they just want to play. So, and then the SPACs just created a fantasy aspect to it because the SPAC, I can look at the team, go, oh, look at this guy. He's got a great track record, Chamath. This guy's a baby Chamath. This guy's a wannabe Chamath. This guy's got a team that's an EV dream team, and they've got $400 million to go buy a company. So it's like everybody's speculating on what the next moves are. And so part of that is froth. Part of that is just goddamn excitement about being part of the game.
And the evolution of how to be able to participate, like you said, like everyday people can be VCs and like invest in people and trust that they're going to do the right things. And if they blow themselves up, hey, so be it. But at least they get the opportunity to blow themselves up or do really well. You know, they have the ability to do that when in the past that wasn't a possibility, right? But
if I want to do a SPAC, if Howard Town wants to go public in a SPAC, I got one shot. Like if I fuck it up, no one's going to do my next SPAC. Right. Because there's that social.
No, but then what happens is that you're very successful on the first one. So then everybody wants to be in the second one. That's the one that blows up.
Howie Town, the expansion town, is everybody wants to be a part of that, right? But Howiestown, all eyeballs will be on Howiestown 1.0 because
what's the ticker symbol? H-Town, HTWN.
yeah, can't share it at this moment. That could be inside info. The but I have to build the best. I got one shot at this. It's like it's like the song. It's like the rap song. You know, SPAC is much like
which rap song are you referring
White
to?
rapper, what's his name from Detroit? You know, the rap song. Because I've narrowed it down for you. Because I added
Eminem is who you're referring to?
Eminem. What the hell's the name of that song? I only listened to it.
I think just one shot. I'll let you just...
And, you know, and it's like you got one shot right now. You can do a SPAC. But guess what? A lot of smart people are running for that window. And so you may squeeze through that window.
Why, you think there'll be regulatory coming?
No, there's just going to be a crowd of people doing it because you can do it. It's like, it's not for everybody, but there's going to be thousands of great entrepreneurs in a zero interest rate world going to do SPACs, right? And this is what the market don't understand. Of course, we talked about it last show. If interest rates rise, the markets crack. If, you know, if some of these companies don't develop into real, you know, excellent deals, the window will chat. But my gut is people are actually underestimating the power of the SPACs, okay? Because everybody's rushing, and you'll see it in Barron. They're going to go back and historically look at SPACs returns and go, oh, 90% of these turn out bad. Guess what? Good data, but it's based on not forward-looking data, which is how many SPACs have come out in the last 6 months, unrelated to SPACs of the last 10 years that are based on Chamath doing cloud deals.
Versus gold miners.
Versus mining, industrial, real estate levered roll. You know what I mean? Copper.
Gross.
So the data may be good, but the data set is not the same as the data set that we're about to get. And that's what I try and tell people who are being negative. I could be worse. Don't get me wrong. The tech bros could make it worse than the mining bros. But the odds are low because the margins are good, compounding of software and network.
Scalability, it's ridiculous.
It's ridiculous. And so every day I wake up, like I said, I used to go to StockTwits, Apple, Netflix, Facebook, you know what I mean? Oil, gold. It was like the behemoths were trending every day. And it paid. Listen, you followed that tape, the fangs carried the day
And now?
6 years. Today, I haven't seen a fucking, other than Facebook getting sued by the government, I haven't seen a FANG stock trend on StockTwits for months.
Yeah. What are you seeing?
Just pull it up right now. It's end of December. I got MVIS, AMCI, Riot Blockchain, GameStop, some lithium company. Oh, Walmart. That's interesting. Cloudera. And every 10 minutes, it's a different name. And so, you know, kids are exercising their freedom to pick stocks. I mean, I think this is just unbelievable. And
Rachel's account. Rachel's killing it.
Killing it.
Howard's daughter's up like 100%.
118. Here's her account. Hang on.
Do you get access to her account?
Yeah, we both do. 1 year, 121.67%.
Wow. I just went up.
So
he probably owns crypto because it's after hours.
He owns some crypto.
There you go.
She is up 72% the last 3 months. And we're not talking like YOLOs. This is a diversified. She's got all the stocks that I like. Zillow, CRISPR, Roku, Farfetch.
Sounds like she's been reading All-Star charts.
She reads my blog. She loves you, but not for the same reason. She just thinks Teen Wolf's a cool movie. And
make sure she's getting our research. She loved the 2 to 100 club. That's a sexy one.
So anyway, so this fantasy thing, dude, I mean, how do you feel about it?
I have no idea what you're talking about. Like when you tell me that SPACs are like the fantasy of the stock market, like why fantasy? Because you get to build your own team and let them attack. Is that what you mean?
No, I meant like what was fantasy other than the ability to act like a GM or the ability to gamble.
Oh, you're not talking about like fantasy sports. You're talking about like fantasy play, like the.
It's no. People go, "Oh, when's there going to be a fantasy game for the stock market?" Sorry, I didn't make that clear. Why play a fantasy game? You can go handicap a management team trading at $10 a share. Can they get their DSPAC going? That's literal handicapping. You can't, you have to go think how they're thinking, go make some calls, try and get them to say something, right? It's very quiet they can't really say anything, but you read through the S1 and you go, okay, you try and pin things together, where they invested, which companies are they invest. There's a lot of transparency hidden in those S1s. And that S1 drops, everybody's got access to it. Right. The minute those things start trading at $10, it becomes a speculative private deal. Can they get a deal done? They got 2 years to get a deal done.
All right. So then what's the move? So we're going to 2021, and what's the move? Let's say you want to get started investing in some of these SPACs. Like, where do you go look? What's the move?
Well, it's great. There's some great SPAC, IPO tweet. The Renaissance guys have always had a great IPO tear sheet. You can follow them on Twitter. There's all these SPAC email lists that track every S1. You can go to Edgar and just go start reading through the S1s. It's a little hot right now. Like, stuff is gapping 100% on.
Look at the IPO index, ripping, man, that thing. Woo!
But SPAC index, there's now a SPAC index, and you can go look it up on Coifin and get.
Is there a SPAC of SPACs yet?
Yeah, there's a SPAC ETF with SPAK, I think. Hang on. So you can just go tear that apart and go, what's in it? Yeah. There's a SPAC ETF, which is ripped 30%. So I don't know. I mean, I'm really enjoying seeing young people get the last laugh, because for years they were told to stay in their lane, and everything was Warren Buffett, documentaries on Warren Buffett. No, don't get me wrong, geniuses and smart, and they say whip smart things, but that active investor era died a terrible death in 2001. I mean, and then you had the real estate bubble, and then the index boom, and then you had now
actives are back.
And they have the tools, to really.
How long do you think they'll be here? How long will that stay?
One is a major 30-year trend.
Roaring 20s, here we come.
I hate the term roaring 20s. This is just going to be this is going to be a very.
You hate a lot of terms, Howard. There's a lot of terms that you dislike.
Well, because things get compressed now, right? Because you have digital. The 9 years of I mean, you know what I mean? Like, now something breaks and it can last 2 days. It doesn't last 20 years. But I think in this era where YouTube exists and YouTube and TikTok, someone could become the Kramer in like 3 days that you've never heard of and can move markets, right? You used to have to spend a lot of time to work yourself onto TV to drop a stock name that could move a stock. There's shit happening like that we don't see, which makes, stuff trend on StockTwits and elsewhere. So I don't know. I think people get addicted to that feeling. And this younger generation, as I talked about on our last show, doesn't want to get rich. Like, they get it. Like, they have some power, right? Like, if they have a brand, they don't want to blow it. So they're not just going to rush to do penny stocks. They're going to talk about Tesla. They're going to talk about the brand, the 8 to 80 brands that I talk about. It's like, where do I put they're not shy about owning McDonald's or Chipotle. It's like, it may not be sexy, but they also know it's going to be around. But they're not going to go do oil and airlines and hotels. You know what I mean? They just want to understand.
My friends must have not gotten that memo, because they're asking me about airlines and hotels.
Reading the wrong stuff. They really are reading the wrong stuff. And then your job is to point them into like how to go faster. I mean, there's nothing wrong with saying you want to own an airline, but these should all be privatized and these should all be taken off market. Kids should be speculating in growth and brands that have high.
All right, give us a growth and a brand. What are we buying going into the first quarter? What's the trade?
It's a good question. What have I added recently? I think weed continues to have another phenomenal year as a platform. And when I say
marijuana stocks,
I'm thinking U.S. marijuana from a tax perspective continues. And I've owned this MSOS, which is the U.S. multi-state operator ETF. So it's relatively new. It's a complicated ETF that buys pink sheet American ETFs.
Got it.
I mean, ETF multi-state operator stocks. And these are it's not for the faint of heart, but I think Americans, the market to invest in weed. We need the money. Governments need the money. It's coming.
All right.
What
about that ETF clicks that goes long the internet retailers and shorts the brick and mortar? You like that one? Breaking out?
Interesting, but I think kids have enough knowledge to just own the clicks that they like. So Shopify, same boring names that I've like broken out. What's that? Farfetch, Etsy. Again, they're all massively susceptible to 50% corrections because of the valuation. So again, it's hard for me to say these are my favorite names. But coming into 2021, I think marijuana, I think biotech continues to be in the spotlight. I'm not an expert in it, so I've been owning XBI and IBB.
Yeah.
I think medical instruments continues to be, again, I own the
Abbott Labs. Look at Intuitive Surgical breaking out.
So I think medical instruments continues to be a global phenomenon as we age, and that's how you play the boomers aging. They want to live. They have money. They'll spend whatever it takes on.
So you mean the tech of
healthcare? I have a friend who's very young. She's in her early 50s. She just got 2 stents put in this morning, like bing, bang, boom. And it's like a nothing surgery. I mean, of course it's just something, but by the time we heard about it, she had already had it done and was out of the.
But think about what you're saying, Howard. You're talking about biotechnology. You're talking about medical equipment, which is a bunch of robots. Like that's the tech of healthcare, just like the solar's the tech of energy and the fintech of financials, not the banks, but the exchanges and the technology. We're seeing it sector by sector.
The new exchanges will also be education. So the MOOCs, M-O-O-C, multi-operator channel. I forget what MOOCs stand for. I linked to some. But education and healthcare, right, are the 2 biggest GDP spends, okay? Technology is going to flow to those places because that's where we don't need another Twitter, and everybody jokes, oh, Twitter. Well, you've been joking. Solar broke out of a 20-year doldrum. Right? They've gone to energy and done it. Okay. The next big things, a lot of friends of mine who made a lot of money are going to climate. So I get it. That's not for me. Like the climate stuff and the political stuff. I hope they get stuff done there and solar will do its part. But if you can't figure out finance and education, healthcare, those 3 should carry you for the next 10 years because it's just too big a part of the GDP. Doctors are unhappy. I've invested in enough healthcare startups now to know that doctors are coming around the corner and starting to, just makes their life easier. From Robin Healthcare to picking life insurance with NIO. We've invested in some healthcare software companies that doctors laughed 2 years ago, oh, you'll never get it through the hospital. And that's been the issue. It's like doctors want this stuff and they're like, like they don't even want to try because of billing and because of how do they code it.
All the headaches.
Yeah, they're just like, how do I get paid? And I think we're over that hump because
so fintech, healthcare, education.
Yeah.
Fintech, healthcare, education. I like it.
I think you can say that for 10 years, Hopefully military spending comes down. I think cybersecurity on the software side, because if military spending comes down, we have to spend it more on cyber, right? So the basic infrastructure software companies that do cyber have been really hot, but I think those pullbacks will be bought forever in this world, because in a world where you can't launch bombs, you can, but what's the effect? You just throw a bomb at each other. I think cybersecurity becomes the most important part. How do you keep the velociraptors away from the gate? And so there's 4 good ones.
Love it. All right, brother.
All right, my man. I'm going to send you a Manscaped. How long did that take to grow out?
I don't know. It's not that long, is it?
I don't know, but how long did that take you? 6-7 months?
I don't know, like 2 weeks.
Really?
Yeah. What do you mean?
All right. Well, I think it looks pretty good. You need some sun.
So good. I'm OG, overly grateful for the chance to kill the beat, bro. Kane and Abel ain't trying to lay low, peep the shine. Comfortable in my own skin.